Okay, everyone, kind of where we left off on the part one of the lecture. I'm just going to go back to here and start. We're almost towards the end of the lecture, so let's just go back and do a recap on this little grid right here, so I can show you how the multi-step process works. So the company had 3,000 units beginning in work in process inventory, and then during May, 6,000 units were started. 1,000 of those units were completed. So completed and transferred out to the finishing department. So we know that 4,000 units were completed and transferred out. And that's how we got to this slide right here where we see units completed and transferred out at 4,000, 4,000, 4,000. It's going to be all across the board for that. Now when we look back and we look at the 5,000 units that were partially completed, and you see that 60% were completed for direct material, 30% were completed for direct labor, and 30% for overhead. So if you take 5,000 and you multiply it by 60%, right, you will come up with $3,000. And if you take 5,000, right, and you multiply it by 30%, because direct labor and overhead are both at 30%, then you will get 1,500. So so the units completed and transferred out are all going to be 4,000, and then the ones in work in process inventory are going to be 5,000 for physical units because that's how many in total, 3,000 direct materials, that's the 60%, and 1,500 for both of these because that's the 30%. And you have total units accounted for 9,000, 7,000 in direct materials, 5,500 for direct labor, and 5,500 for overhead. These three numbers you will use a little bit later. So then you come here and you see that cost and beginning work in process inventory is 95,000, 40,000, and 26,000. Well, where did those numbers come from? They're given, they're here on the grid, and you see cost and beginning work in process inventory totaled 161,000, 95,000 in direct materials, 40,000 in direct labor, and 26,000 in overhead. If we go back to our grid here, we see the 95, the 40, the 26 totaling the 161,000. So where did the 115, 70,000, and 40,000 come from for the cost incurred during May? Well, that's also given right here. Cost incurred during May, $225,000, broken up by 115,000 in direct materials, 70,000 in direct labor, and 40,000 in overhead. So when you go back to the grid here, you see those three, 115,000 plus 70,000 plus 40,000 equals 225,000 in total. So for direct materials, the total cost to be accounted for is 210,000. You will use that number as well. Direct labor total cost to be accounted for is 110,000. The overhead total cost to be accounted for is 66,000. All right. So remember I said we are going to use those numbers again. So the total cost to be accounted for in direct materials, you have 210,000. There it is right there. For direct labor, you have 110,000. There it is right there. And for overhead, you have 66,000, and there it is right there. Okay, so those are our total costs to be accounted for. But then you may ask, well, where did we get the total equivalent units accounted for? The 7,000, the 5,500, and the other 5,500, and I indicated earlier that we would use those three numbers. Those numbers came from here. Total units accounted for, 7,000, 5,500, and 5,500. So you have to kind of keep bouncing around these few grids and the one with all the information to kind of get your answer. So you see, if we divide divide the 7,000 or 210,000 by 7,000, you get $30 is the cost per equivalent unit for direct materials, and $20 is the cost per equivalent unit for direct labor. $12 is the cost per equivalent unit for the overhead. The total is $62 cost per equivalent unit, and we're going to use the 30, the 20, and the 12. We're going to continue to use those numbers as well. So it says step 4, use the cost per equivalent unit, which I just indicated we would, to assign cost to to 1, completed units transferred out, and to 2, units ending work in process inventory. So you're going to kind of use the numbers two different ways. Gets a little tricky, so we have to kind of slow this part down, right? So cost assigned to units transferred out. You see that's 120,000, 80,000, and 48,000. Well, you say, well, where do we get those numbers from? You can read the legend down here and it'll tell you exactly where you get the numbers from. But you're 120,000, right? So if you go up here, you'll remember that we have 4,000 in units that were completed and transferred out, right? So we're going to take that 4,000, right? And you're going to multiply it by 30, right? So 4,000 times the 30 is going to equal the 120,000, right? So like I said, if you want to double check my math, feel free to do so, right? So then we have our 4,000, right? That will go back to right here. So we still have our 4,000, right? Oops, I'm sorry. Let me go back, right? And so we have our 4,000 and we multiply it by 20, right? And so we have our 4,000 and multiply it by 20, we have 80,000, right? And then our last number, we take our 4,000 and we multiply it by 12, right? And our 4,000 times the 12 is 48,000. So now you've multiplied those numbers and you've got 120,000 plus 80,000 plus 48,000 is 248,000. Those are all of your costs assigned to units transferred out. Now you have to look for your cost assigned to ending work in process inventory, right? So you see that this is 90,000, 30,000, and 18,000. And this one's a little bit trickier, so you wonder, so okay, so where did I get the 90,000 from? So you have your units that you ended in your work in process, right? So it's still going to be multiplied by the 30, the 20, and the 12, but you're going to multiply those numbers by 3,000, 1,500, and 1,500, right? So one, you take 3,000, you multiply it by 30, right? And you come up with 90,000. Then you take your 1,500, and we'll remember, don't have to do it twice because 1,500 is the same for direct labor and overhead. And so you take your 1,500 and you multiply it by 20, right? Multiply 1,500 by 20 and you get your 30,000. And then you multiply your 1,500 by 12 and you get your 18,000. So as you can see, if you add those three numbers up, you add your 120,000 plus the 80,000 and 48,000, you have your 248 costs assigned to units transferred out, and then you have your costs assigned ending work in process inventory. 90,000 plus 30,000 plus 18,000 is 138,000. Total cost accounted for is 386,000. So the four-step process must be performed for each processing department. The previous example in the journal entry to record the cost assigned to units transferred out as follows. So you have $248,000 transferred out of assembly to finishing, right? Remember we talked about it going from one department to another. So you want to prepare a production cost report for a processing department, right? And this is what it looks like. All it's doing is taking all of the numbers that we accumulated and calculated and putting them together in one fresh grid. Yes, I took you through kind of the tough way to do it, but you know, you could have skipped ahead to this slide and saw the end result, but this is the best way to actually learn it. So what is a production cost report? Production cost report summarizes the production and cost activity within a processing department for a reporting period. A separate report is prepared for each department. The four key steps are formally presented in the report. And here you go, you see step one, summary of physical units and equivalent unit calculations, which is what we did. Units to be accounted for, so physical units, 3,000 in beginning work in process inventory. Units started during May is 6,000. Total units to be accounted for is our 9,000. As we recall, that we had 3,000 that went out the door, and then we had 1,000 out of that unit started in May that were actually completed and went out the door. So 4,000 units were completed and out the door out of that total 9,000. Then you look down here and you say units accounted for, so you have physical units all across the board. They're always going to be 4,000 because those are the 4,000 that went out the door and were transferred out. Units in ending work in process inventory, you have 5,000, right? And why do you have 5,000? Because 1,000 went out the door, right? And 6,000 minus 1,000 is 5,000, right? And then you have 3,000 for direct materials because that's 60% of 5,000. You have 1,500 for direct labor and overhead because that's 30% of 5,000. Total units accounted for 9,000 units. For in total, 7,000 in direct materials, 5,500 direct labor, and 5,500 for overhead. And in the bigger grid with all of the other information that we accumulated. So summary of cost to be accounted for, so direct materials, so cost in beginning, work in process inventory, 95,000, 40,000, 26,000. Cost incurred during May, 115, 70,000, 40,000, right? We add those up. Total cost to be accounted for, 210, 110,000, 66,000 equals 386,000. All of which we figured out these grids separately, but these are just how they would look put together. Calculation of your cost per equivalent unit. So you have your 210,000 divided by your 7,000, you get your 30, and so on and so forth down the line. 110,000 divided by 5,500, you get 20. 66,000 divided by 5,500, you get 12. You add those three numbers up, 30, 20, and 12, and you get $62 cost per equivalent unit. And then down here you have your 120,000, and it looks a lot easier when you have all those numbers right in front of you, right? And so you take your and actually the one number that we're going to multiply is on the previous page, but then you take your your 4,000 and multiply it by that 30 to get that 120,000, and then also by 20 to get 80,000, and then by 12 to get 48,000, and then you multiply the other numbers or the lower numbers, the 3,000 and let's see, what were the numbers again? 3,000 and 1,500 by 30, 20, and 12. So you take the 3,000 multiplied by that 30, you get your 90,000. You take your 1,500 or multiplied by 20 to get your 30,000, and your 1,500 divided by 12 to get your 18,000. And that's how you go through the process of coming up with your total cost total cost accounted for, which is $386. $386,000. Big difference, big difference. So how to excuse me. How do managers use production cost report information? Managers use this report for decision-making purposes. Production cost report helps managers answer several important questions, such as how much does it cost to produce each unit of a product? What price should we charge our customers? How much should we charge the customers? We need a markup because we need to make money. Which production cost is the highest, direct materials, direct labor, or overhead, and what can we do to improve that? What can we do to fix it and or change it? And where are we having difficulties in the production process, right? If we have inefficiencies, we should go attempt to fix them. So why might the per unit cost data provided in the production cost report be misleading? Managers must be careful not to assume that all production costs are variable costs, right? Some managers make that mistake. The per cost unit will not necessarily hold true in the future if production levels change due to fixed costs. And chapter 5 covers variable and fixed costs in detail. Very interesting chapter, things that you will use all throughout your life. Variable costs that change in regards to how much you produce, and fixed costs which remain fixed and don't change. They don't change if you sell 5 widgets or if you sell 500 widgets. So that's the end of part 2 of the lecture for chapter 4. You'll have a quiz this week as normal. You have a homework assignment, and your test will now be made available. You don't have to take test number 1 until I believe the 15th, but I always suggest that you review the material, chapters 1 through 4, and then take the test as soon as you feel like you feel proficient on those 4 chapters. I think it's about 49 questions. It's a good enough time limit for you to get in there and get all those problems correct without rushing through the test. As always, have a good day and a great week. And if you have any questions, feel free to let me know.